Hey guys, Credible Crypto here with a new market update. This one's specifically going to be talking about Bitcoin. We'll touch a little bit on some of the altcoins as well, but primary focus of this video is Bitcoin. We're at a very important pivotal point here, and this is what I want to make the video about because the direction that Bitcoin goes here will, in the short term at least, dictate the direction of most alts. And of course, following this immediate move on Bitcoin, when Bitcoin does really break out of this multi-month consolidation that we have, I do think that Bitcoin will steal the show. And many of the alts that have been performing really well over the last 3 to 6 months, I think are going to slow down. Some of the alts that have not been performing well over the last 3 to 6 months, I think are going to pick up. So essentially, I think we're going to see a big rotation here as Bitcoin breaks out and heads up for the next leg to 100K plus. So just jumping back from the last update that I shared with you guys, basically we talked about how 60K is the line in the sand right now. In validation of our lower time frame impulse to the upside, we basically have what I believe to be reaccumulation occurring here since March of 2024. So it has been 4 months of essentially reaccumulation in what I believe is a very large reaccumulation range. Following this reaccumulation, or I guess you could say part of this reaccumulation was the formation of a smaller range here, from which we saw a deviation and a reclaim, and which we also saw spot absorption occurring between the low here and the subsequent higher low right here. And again, keep in mind, I talked about this in my last video, so I won't just repeat it. I won't show you the data again, but we talked about how the data was showing that we were seeing spot buyers stepping in at this level, forming a divergence here between these two lows, which is what we want to see in reaccumulation. And from that area of absorption, we then saw an impulsive move. So the idea, again, on the higher time frames is that this impulsive 5-wave move is the first wave of 5 of a much larger impulse to the upside that should ultimately take us to $100,000 plus before the next major correction takes place. How high this goes, again, minimum, I'm thinking 100K. We could certainly push up to 120 or something of that nature. Remember, this first leg is typically the smallest. So if this was a $10,000 move, which it was, then the third leg could be multiples of that. If we take off, let's say from 65, this could go up to 85, for example, maybe 90. We get a sideways correction, and then we get a fifth, which could be even stronger. And at this point, guys, this is where we start to go parabolic. Each of the subsequent legs should be more aggressive than the last. And in somewhere in between this leg up to 100K plus and our actual top. And again, this isn't drawn to scale, so I'm not trying to say here that we're going to 255K, but somewhere in between this leg and the final leg, we're going to get, I think, one sideways correction left before the final blow off top leg. Again, this is on log scale, so I take it off a log scale. This kind of puts things into perspective a little bit more. This is exactly what, we expect a blow off top to look like. Again, this isn't drawn to scale, so if I were to draw this a little bit more realistic, probably looking at maybe something like that, right? And what we end up then with is this parabolic advance, this blow off top, just like what we had back here in 2017. That now looks so minuscule and so small, but back then looked like essentially a vertical move to the upside that was getting steeper and steeper into our top. So again, the same idea here. If I take it off log scale, you can see exactly what I'm talking about and how we expect that to accelerate. Again, I've talked about how I've placed the potential for a top on Bitcoin in October. So that is right around here. Again, the time is not drawn to scale necessarily here. This is mainly just to show market structure of the corrective move. October is where I estimated our top to be, and no change to that thus far because, again, these legs should get more aggressive and take less time than prior legs, so this should speed up. Yeah, aside from that, guys, let's go ahead and talk now about lower time frames, and we'll go into time estimations here a little bit deeper in the video. So let's go ahead and jump down to lower time frames, right? The whole idea here, guys, is that as long as 60K is not breached, this mega leg up to 100K plus has finally officially started. And what we're seeing right now is just this subsequent correction after this first impulse, which should be followed by the next major impulse that should be at minimum $10,000 to the upside, more realistically, maybe $20,000 to $30,000 to the upside, and that should take us close to 100K. So 60K is our line in the sand. A few days ago, I tweeted that I expect that we would be ready for the next leg to the upside within 7 to 10 days. And I think that tweet, let me go ahead and take a look and see if I can find it. All right, so here's the original tweet on June 8th, and basically quote tweeting this tweet I made in April saying that the next big move will be brutal. But you get past that and you get to enjoy up only the likes of which you haven't seen in over 3 years. That correction took us to 56K. Again, that correction was the one that took us down to these lows here at 56K. From there, we got our corrective move up, and then we actually impulsed off of 60K. So I said downside is now limited to 60K, which is our validation, and realistically no lower than 62 to 63K, if that, with a high likelihood that this level gets front run as well. I give it about 7 to 10 days before we absolutely gig ascend Bitcoin, targeting 100K plus. So 7 to 10 days before the breakout is what I gave it at the time before we head on to 100K plus. And I then followed that up with a tweet on the 12th of June, so 2 days ago, saying it's been 4 days since this tweet. I'm still thinking we have about 5 days or so of chop on Bitcoin. Let me explain to you guys why I said that, and this break of 66K, why that may have tweaked that time frame a little bit. Again, timing is always hard to predict price levels, which is why we rely on price levels for invalidation, not on time, because time is flexible. Price levels are not really very flexible in terms of local invalidation. So with that being said, the reason why I said I think we only have about 5 days left till we start the next impulse is because when I tweeted that we were trading here at just above these lows here, okay? So what had happened in terms of corrective structure? We had the impulse up, we had a three-legged move down, which is corrective as we know. We had another three-legged move up, which is corrective as we know. At these range highs, I was cautious. I said, I think we're going to come down to the range lows, and that's exactly what we did. We broke down to the range lows, and you'll note that we broke down in, again, a three-legged move. And once again, we held above these lows at 66K. So what we have here then is a three-legged move, a three-legged move, a three-legged move, essentially what looked to be a potentially complete corrective structure. We then had what looked like a three-legged move to the upside. And at the time, what I was hoping was that we would form a fourth wave here and a fifth wave to the upside. What does that mean? That would be a nice impulsive move. So at the time, I was hoping that we got our impulse, we got our correction, and that we were going to start the next impulse here. Okay. And that's why I said within 5 days, I expect a breakout, because we would have then completed a lower time frame impulse, got a sideways correction, and then broken out. However, following that tweet, we didn't get a completed 5-wave move. The move to the upside faltered at 3 waves, not 5, okay? I was not expecting that. I was thinking that we were ready for the next impulse, but the move faltered, right? We got a 3-legged move up, and then we corrected the entire thing, and now we've breached the lows of 66K. So all this really means, guys, it doesn't change much in terms of our levels to the downside. 60K is still the line in the sand. It's still the invalidation. Anything above that is technically fair game. And then 62 to 63K is still like what I called in my prior video, like the dream long zone. And I still think that the dream long zone will likely get front run. So nothing has changed in terms of price levels or invalidation levels or anything of that nature. The only thing that has changed right now is the time until the breakout. And why I say that is because this move failed to impulse, this little lower time frame move. It means we're still in this corrective structure. The correction that started here on May 21st at 71K is still ongoing. Again, what we're looking for, guys, is a lower time frame impulse to signify the end of this correction that started on May 21st and the start of our third wave. Again, if this is our first of 5, we're looking for the start of the third of 5. And that third of 5 is going to start with a lower time frame impulse that looks just like this one off of 60K. And so what we're looking for is, can we identify that impulsive move? And again, guys, we do this all the time. For those of you who are new to the channel, we've been identifying these lower time frame impulses since 15K, right? That's exactly what I look for to get a step ahead of when we may be seeing a reversal. We identified a lower time frame impulse here at 38K. We were able to fill a bunch of longs here at 42K and row those up to 60K plus. Why? Because we were identifying and paying attention to the lower time frames. So that's all I'm doing here. Again, I'm looking for a clean impulse off of one of these lows to indicate that this correction is complete. Because when we get that impulse, it means the next move up is imminent or has technically already started. So again, areas of downside are the same. They have not changed. All we're doing now is waiting for this corrective move to complete and waiting for an impulse to print. Okay. Now, what do I think is most likely here in terms of this correction ending? We've moved down now. We've broken the lows at 66K, but you'll notice that this move down is still corrective, right? This isn't an impulsive move down. This is just more chop. We've taken this swing low here. The swing low right here remains untapped. And just below that swing low is this liquidity void or this gap that leads into the ideal long zone, right? I'm going to write dream long zone. And so what a lot of traders are looking for, and it makes sense, it's logical, is they're looking for a push into a fair value gap. You can call it a fair value gap. You can call it an inefficiency. A lot of traders are eyeing up that gap, this inefficiency, into this area of demand for a long. A lot of people are eyeing up longs into the green zone. And as I've previously said, there's a lot of reasons why those ideal, perfect dream zone longs often get front run in very bullish environments. And we'll take a look at the data here as well, as we always do, so that I can show you what I mean. We'll take a look at the metrics on Velodata here in a minute. But the point being that downside is very limited if this idea is correct. Of course, I think it is. I've seen enough data to think that it is. I don't think we're going to lose 60K. So downside extremely limited here if that's the case. And there are no guarantees that we will get this sort of a push into the dream long zone. So just keep that in mind. We could already have seen the bottom here, okay? Or maybe we make one more marginal low, we wick below this into the inefficiency, but don't quite make it to this demand zone. That's another thing that I've seen happen quite a few times as well. You have a lot of people targeting demand after the inefficiency. Sometimes we just wick into the inefficiency like this and front run demand and just wick right below there. And then before people can pile in here, we reverse. So possible that we have one more marginal lower low here. Again, possible we get the dream long zone, but I wouldn't necessarily bet on it. Either way, downside relatively limited. What do I think that means? Again, we're looking for an impulse, but there's a few different ways that this can play out. And just to kind of highlight what I think will be like the most extreme scenario, right? Those of you who follow me on Twitter know that I've bought some call options that expire in the end of July with a strike of $80,000. For those who are not familiar with options, basically what that means is that I'm betting that we'll be above 80,000 by the end of July. So for me, for that bet to pay off, basically, it's based on not just price, but time as well. Options is quite risky if you don't understand what you're doing. I mean, quite risky even if you do, because you need to really manage risk on options, because even if you get the price right, even if I'm right about us not going below 60 and us seeing 80K plus, if I get the time wrong, then I still lose the bet. So don't mess with options if you're not experienced. I'll be sharing some more content to teach you guys what I know about options soon as part of my new educational series. But for now, point being that for me, it makes sense to consider, okay, how long can this correction stretch out if I am betting that we're going to be at 80,000 by the end of July? Because I have a time deadline that I need to pay attention to. So I will look at kind of the most extreme case that I can find in terms of time and then see if it still makes sense to keep the bet that I have. So let's look at the most extreme case. Okay, the most bullish case, I guess you could say the sooner that we visit the dream long zone, the more likely we're going to see a very bullish reaction. So if we're not going to hit 60K, then at the moment that we hit the green zone, we're probably going to see a sharp reversal. So that might kickstart the next move up if we get down into this dream long zone. But what is the worst that I can see happening here, right? We have 3 legs down, 3 legs up, 3 legs down, 3 legs up, 3 legs down. We're just getting corrective chop. A lot of times before a very aggressive expansion of the upside, we see a tightening of volatility, a constriction on the chart, a consolidation on even smaller time frames, and a kind of a record decrease in volatility before we get some massive expansion. So what does that look like? Well, we have, again, just looking at corrective moves. Let's just take this as a complex correction. W, X, Y. For those who are not familiar with Elliott wave, don't worry too much about the verbiage I'm using here. Just know that we're talking about corrective moves, basically corrected three-legged structures, another X wave. Oftentimes, these corrective structures can end with a triangle, right? We have a corrective move down. So what would this look like? Corrective move, corrective move, corrective move, corrective move, consolidating into this triangular pattern, which classical chartists will call it a flag. You can call it a bear flag or a bull flag, but that's not too relevant here. What this would be some final consolidation here in a tightening wedge-like structure or flag-like structure, which would then be followed by the breakout and impulse, okay? So something like this is what I'd be looking for if this is going to drag out. And you can see here that these legs should be relative to each other if this is a triangle. So if this move down is our first leg of the triangle, then the legs that follow should be about the same in terms of time and price in a constricting pattern. And that gives us just a very rough estimate of, okay, maybe we consolidate further until June 24th, which is about 10 days from now. So maybe 10 days of further consolidation, for example, if we're going to get a tightening structure here and then look for a breakout. So this is, again, still very healthy, still totally fine. This assumes that we're forming a consolidation structure here. We have a break below these lows. We have a front run of that fair value gap or that inefficiency for now. And if we get a nice move up like this here in the coming days, back up like this, then the odds that this is a triangle playing out become increasingly likely. Right now in the lower time frames, we broke down below this key low, but we now have a lower time frame reclaim. So that kind of supports the idea that, hey, maybe this was the bottom and we're now going to see a reversal to the upside. We'll go over some data that may support an idea like this. But in other words, guys, this corrective structure that I had hoped would have been over here is not quite done. We're going to see a little bit more chop. Nothing has changed in terms of our downside levels. Nothing has changed in terms of my expectations on these downside levels. And extremely, extremely bullish here, but I think we're going to see some more days of consolidation. And again, this could play out in a number of ways. This is just a very common structure that I see with the triangular consolidation. But yeah, it could play out in a number of ways. Maybe we get another three-legged move up, then we get a what we call like an ascending triangle. That's another potential structure here, and then a breakout like that. Maybe we have not put in our bottom yet and we get another three-legged move up and then get another bleed down. I mean, it could happen in a number of ways, but the way that typically takes the most time is these sort of repeated consolidating structures like a triangle, which is why, again, I'm looking at what will probably take the most time to develop. So yeah, those are my thoughts on Bitcoin here, guys. Let's take a quick look at the data because we like to pair data with our naked price action to give us a little bit more confluence and confidence in the ideas that we believe are happening here. So let's go ahead and take a look at Velodata next. Okay, guys, so this is Velodata. For those of you who are new to Velodata, I do have a tutorial on YouTube that explains how to set up your dashboard like this, that also explains what these indicators are, kind of a very brief overview of each of these indicators that I use and why they're useful and how to use them. So go ahead and watch that if you're new to this. Let's talk about open interest. We'll talk about CVD. We'll talk about PEPE premium, and we'll talk about funding. So again, focus here, guys, is remember we had what I believe was this kind of accumulation base down here at the lows. Okay, we saw absorption between this low and this low. We saw an impulse up. This is our invalidation here at 60K. We should not go below that. I'm just going to mark this off a little bit. And now we're looking for, again, similar signs in our data that show that, this is likely another local bottom forming here, a higher low above 60K. Let's take a look. So first off, we have open interest. Open interest is high, okay? And this is not ideal. I prefer open interest being low. We got to a point here where it dropped down pretty low and I was comfortable with that, but now it has grinded all the way back up to what I call the danger zone. Danger zone simply being this level of open interest that we rejected from previously multiple times, that marked off local tops on price multiple times. We're back there. Now, one thing I want to make clear here, because I get questions about this a lot, I want to emphasize that open interest is not inherently bearish when it's high. It is technically a neutral indicator, but when open interest is high, it allows for the possibility of liquidation flushes in both directions, okay? Now, oftentimes in prior analysis, you'll see that when open interest hits these highs, I'm looking for a move down, a flush down. But that is not always the case. It has frequently been the case when we're in ranges that open interest tends to hit these higher levels and then flush down. But we have seen instances where open interest is high and short squeezes to the upside. The idea is that when open interest is high, or at our danger zone, as we like to call it, it indicates that there is potential for a volatile flush and liquidations in either direction. And we have to look at our data to kind of identify if that direction is more likely to be longs being flushed or more likely to be shorts being flushed. If we ignore all this data and we exclusively use open interest and price action, we're not going to get an idea of whether this open interest drop could occur through a short squeeze or through a long flush. So it's vital that we pay attention to our data here to kind of help us identify what direction the squeeze is more likely to occur and when open interest is at these highs. You'll notice that every time open interest hit our danger zone over here and it led to a flush to the downside, our PERP funding was extremely high. When we're seeing a spot premium, which is when the dark blue are below this median line, that is bullish. And when we're seeing these light blue lines above, that is technically bearish. This means that perps are trading at a premium. And when we see perps trading at a premium and open interest is high, it tells us that we have a lot of longs likely in the market that are susceptible to flushes. And that's why every time we hit the danger zone and we had perps trading at a premium, I was looking for a flush down. You'll notice that we had this period of time where we had a spot premium come back. And look at that, guys. What is this period of time where we had the spot premium? This is that period of accumulation that I previously pointed out, that accumulation bottom that we talked about, where we were seeing spot absorption. And that is confirmed now with the presence of this spot premium. Literally, this entire range from the start of it till the end of it is exactly where we had our spot premium. So not only do we view this as an accumulation pattern by looking at it with naked price action, but we can actually confirm what we believe to be true, that this is an accumulation pattern, by looking at the spot premium that occurred in that exact same window. That's actually a beautiful example. Coincidentally, just noticed that. Hadn't noticed that before, but a beautiful example of how we use naked price action and accumulation patterns and then verify those with our data on these types of dashboards. So beautiful. Now, what do we see here again, guys, showing up as we push into these lows? And again, we're betting on this being a higher low above this low, right? We're betting on this being a higher low above 60K. What do we have showing up here for the first time since May 20th? We have a spot premium once again. This is exactly what we want to see as we push into these lows for a higher low to form. We want to see that spot premium come back, and we're seeing exactly that. So this adds confidence to my idea that 60K will not be breached, adds confidence to the idea that we are putting in a higher low above 60K here, adds confidence to the idea that this correction is coming to an end because we're seeing absorption here once again from spot players. Exactly what we want to see. Once again, our data supports the ideas that I'm sharing here, and we can see that looking at these things here. Funding, let's take a look at our spot CVD, and we'll look at the absorption that we're seeing here once again. So again, remember, we identified absorption in the last video update between this low here and this subsequent low here prior to our impulse, right? What does that look like again? Let me just remind you guys. What we saw here was price making a higher low between this low and this low, while spot CVD made a lower low. And that is a telltale sign of absorption, of spot absorption, which is what we want to see. I love this stuff because it makes you confident as a trader when you can verify what you're seeing on the naked chart. Guys, we're not just using price action here. We're looking at everything. This is why I have the confidence that I do, because I'm not just looking at one or two things here. I'm not looking at simple price action. I'm not looking at supply zones and demand zones. I'm not looking at Ellie wave in isolation. I'm not looking at this data in isolation. What I'm doing is I'm putting it all together like a puzzle. We're putting together the impulse. We're putting together the accumulation bottom pattern. We're putting together this key area of demand. We're putting together this range. We're putting together the absorption, the accumulation. We're putting together the premium. We're putting together the funding. Everything together tells us the same thing here. And that is why some people ask you, how are you so confident? Why are you so confident? Or some mistake it as like arrogance, that I think that I'm right because I can't be wrong. And it's never that. It's me looking at this data and seeing every single sign that I want to see visible, present, me looking at the price action and seeing impulsive price action followed by corrective price action with the things that I've shown here, me seeing all of that and then being as confident as I am. So if you feel like I'm very confident in my tweets and in the analysis that I share, it's because I'm looking at all these things, and there's no reason to not be confident when you have all this data at your disposal and you see what I'm seeing. So use these tools, guys. They will help you as a trader, as an analyst. They will help you have confidence in your analysis, which is huge as a trader. If you're not confident in your analysis, you're going to be susceptible to emotional decisions, which is never a good thing. So yeah, everything that we're seeing suggests the same thing. Again, what we're seeing here is absorption. Once again, you take this low, you can see how much we've seen spot CVD sell off, yet price is at a higher low. This is another repeat of what we saw at these subsequent lows. So dramatic and massive and significant spot absorption in this entire region above 60K, which is exactly what we want to see. Spot premium returning, again, exactly what we want to see. So in the coming days, look for these things to continue, right? We want to see continued absorption here. Maybe CVD continues to drop and price continues to hold. Maybe the spot premium gets more significant as we chop around here. Those are the things that you want to look for in the coming days. But yeah, this is Bitcoin. There's not much else to update here. Let's move on to some alts. Keeping this idea in mind, keeping these scenarios in mind, let's take a look at some alts. I just recently shared a long on MATIC on my Twitter, and you can see the chart here that I shared. And I talked about how the last few months I've basically been shorting MATIC constantly. It's been one of my most profitable shorts over the last few months. I took 4 or 5 trades on it. I shared some of them here on Twitter. And for the first time in the last few months, I've now flipped bullish on MATIC for an attempt at a long. And a lot of alts are looking like this. Again, if Bitcoin is bottoming here, if we're right about this, then a number of alts are going to be bottoming too. A number of alts are going to be topping as well shortly, and we'll talk about that in this video as well. But a number of alts are going to be bottoming as well. And like I said earlier in this video, the alts that have been outperforming over the last 3 to 6 months, again, mainly memes and Solana related ecosystem tokens, including Solana, those, I think profits are going to rotate out of those into these coins that have been underperforming. So we're going to see those coins that have been what some would call dead start to perform. and those coins that have been running like crazy start to distribute. Well, they've already been in distribution, as I've previously talked about, but we'll go ahead and cover that here in a minute. But yeah, I went ahead and took a long on MATIC, and I just want to show you an example of a coin or of a chart that I think has potential for some decent upside. So here's MATIC. And again, I've been shorting this thing for months now. So this has nothing to do with my belief in MATIC fundamentally, or I don't hold this coin in my long-term spot portfolio at all. This is simply a trade. But the idea here is that MATIC is one of those coins that could be putting in a potential higher time frame bottom here for a potential reversal to the upside. And if I'm right, this makes for a very potentially lucrative trading opportunity. The long was entered here, stop loss is at 50 cents. And basically we're looking for a higher low here, just like we are on Bitcoin. And if we get that, then we could be targeting, again, at minimum, this is the first area of resistance. This is about a 2.8R trade, close to a 3R trade here at 85-ish cents. Again, my expectation is if Bitcoin's bottoming here, I think a coin like MATIC, which has hit this key area of demand, maybe putting in a bottom here. We may see some chop consolidation, and then I'm looking for a move at least to the red zone here, which is 3R. But we get past that, guys, and it's possible that on the higher time frames, MATIC is gearing up for a final fifth leg to the upside. Okay, if I go on log form, this makes it a little bit easier to see. But what do we have here on MATIC since inception? We have one leg, a wave two, a very clear third wave, and we're now what looks to be potentially putting in and completing a major fourth that has taken the shape of an Elliott wave triangle. We have three legs, three legs, three legs, three legs, three legs. Technical invalidation is a breakback below the C leg, right? This shouldn't go below that. This E wave is allowed to overthrow. I had someone on Twitter mention that we've already broken this trend line, and why are you confident along if we've broken the trend line? This is an Elliott wave triangle. It's not a classical triangular chart pattern. In a classical triangular chart pattern, you're thinking that this lower boundary should not be broken. In Elliott wave rules, it's allowed to be what we call overthrown, which just means that it breaks, but we don't go below the C level, which is invalidation. So this is perfectly fine. Again, we have a key area of demand here that we got a strong move to the upside from. So buyers should step in here, which is why I've entered. And we have a very clear invalidation. So it's a very simple trade here. The point is that if this is correct and MATIC is getting ready for this fifth wave to the upside, this is essentially going to be MATIC's blow off top. The same way that we're looking for a blow off top in Bitcoin, this would be MATIC's blow off top to end its own cycle that started back here in 2019. This would be a 5-year cycle. You can see here that after we put in our major third wave, which was put in May 2021, it's been consolidating for 3 years now. And so this next leg would be essentially MATIC's blow off top or MATIC's final wave to the upside before a massive bear market, the likes of which we haven't seen, right? So again, we're looking at cycles on all these things. And I remember very clearly, guys, when MATIC was at a penny and when it went up to $2.62 for a 260x gain, the amount of chatter on the timeline, on the Twitter feed about MATIC during this entire period, the bullishness was insane. Right now, people are calling MATIC dead. They're saying it's gone, it's done. Again, the narrative follows price. And it's funny because MATIC was like the Bitcoin of crypto during this run. Why? Because price was rising. And as soon as it starts consolidating and going sideways, people think it's dead. It's the same fear and greed that we see repeated in every market, not just crypto. But yeah, if this is right, then we're looking at minimum a 3R trade. But if this is the fifth wave starting here to new highs, we're looking at potentially a 23R trade, meaning for every dollar that is risked, you could potentially make 23. Again, guys, this is not financial advice. If you don't know what you're doing, you don't know how to manage risk, do not take a trade like this. Don't trade if you're not a trader. You can absolutely learn, but make sure you manage risk and you're not risking more than you can afford to lose. This is essentially my profession. I basically do this for a living, so that is why I'm showing you guys this. But point is that this is a very low risk, high reward trade if this is in fact a macro bottoming putting here before a major fifth leg. Again, the minimum is prior all-time highs. Realistically, we should blast past 290 in an impulse that gives us a blow off top. How high do we go above that? Maybe we go to $5, maybe we go to $7, maybe we go to double digits at 10. Considering that we went from a penny to $2.60, a 10x from here is really not that unreasonable. A 10, 20x is not unreasonable. And so we're looking at a 23R, potentially even more than that, right? With this sort of trade setup here. So I've entered a position. I'll be compounding when I get further confirmation being a lower time frame impulse off of these lows. I'll also add, if we break down from here and we invalidate this, it could get a little ugly, okay? But we'll talk about that if and when invalidation hits. For now, this is my primary thesis on MATIC. But point being here, guys, is that coins that have been consolidating for years that many people believe to be dead because they haven't been running over the last 3 to 6 months, money will now flow to those coins, in my opinion. So the ones that have been laggards, the one that have been chilling on the bottom, look very constructive at this time and may see very significant moves to the upside. This is in contrast to the other coins that I've been talking about, like Solana, like some of the meme coins that I talked about in my meme apocalypse video from last month. All those coins that I've talked about, I've closed shorts. I opened a short on Link, I opened a short on MATIC, and I opened a short on Solana. All three of those shorts were closed in profit. All of them shared publicly on Twitter, along with the time that I closed them as well. My entries and my exits, all three were closed in profit, despite so many saying that I was going to get wrecked or that I was going to get blown out or that I was making a mistake shorting. They were all closed in profit. I made about 6 figures off of those 3 shorts combined. And the exact scenarios that I highlighted played out. Solana made a local top right here at 190. I shorted at 169, closed into the green zone like I said I would. And I closed into the green zone because there is a scenario in which Solana makes one more higher high like this before really melting down to sub 115, which is my ultimate target. So I closed shorts. I took profits in the green. I'm hoping we get something like this. Maybe we only get something like this above these highs. Maybe we don't even get that, which would be unfortunate because then I would have missed out on this extra downside on my short. But if we get something like this, I will look to reshort Solana. I'm also interested in reshorting Link. I'm not interested in reshorting MATIC. PEPE is another one. Again, I've said that I believe PEPE is essentially in a larger distribution structure. And you can see here, this was the outline that I made. I previously mentioned in my last market update that I would not be shorting this until we got further confirmation, but this is essentially what I was looking for, a move above these highs and then a meltdown. Obviously, it's taken a little bit longer than expected, but that's all we're getting here, in my opinion. A massive distribution here on coins like PEPE and Solana. We'll take a look at WIF here in a second as well, but PEPE, just so that you guys are aware, this is kind of the line in the sand for PEPE, okay? If PEPE is bullish here, if PEPE is not going to break down, then we need to hold the green zone. If this green zone is lost, then odds are that we're going to break down much further and we're going to get that much larger retrace down to these levels here on PEPE, okay? But right now, as we hold green, there's a chance that we recover from this and potentially make one more higher high or something of that nature before we break down, okay? So I'm not shorting PEPE yet. I'm not interested in doing that because we don't have a breakdown and we're sitting at support, despite the fact that I do still think PEPE, like so many other of these major memes that have been kind of hogging the attention the last 3 to 6 months, are forming tops. Solana we talked about, PEPE we talked about, Doge. Doge is another one. It still hasn't hit my short zone. It's funny because I made the meme apocalypse video about a month ago and I talked about this short zone on Doge, and a ton of people on Twitter talked a bunch of crap about it and said how it's the wrong idea. And Doge is so weak, we haven't even gotten to my short zone, much less made new highs and gone on a massive run. So nothing has changed in terms of Doge. I'm hoping we will get a push into the short zone where I'll look to short it again back below 10 cents. But everything that I talked about in that meme apocalypse video for the most part has come to fruition. PEPE, I literally said in that video when we were trading down here, it's going to make new highs and then come down. It has made new highs and I do think it's still going to come down. Solana did exactly what I said it would in the video and has topped WIF. Let's take a look at WIF. WIF has done exactly what I shared in the video. Last update we were down here, I said I'm looking for a move to the highs, and then I made a funny little tweet about removing the hat above these range highs. Let me just show you guys where we went. Right there, right above these range highs, and then we bled down. Unfortunately, I backed off on shorting WIF because Solana at this point was in the green zone. So I was thinking Solana may make a leg up. WIF could then climb higher. So unfortunately, I didn't catch the short on WIF despite being right about the local top that we put in here. Can WIF go up for another high if Solana does? If Solana goes up for something like this, maybe WIF then climbs with it as well. But yeah, I mean, everything that I talked about in that video is playing out this far. So if you watched that video and scoffed at it or laughed at it, or if you refused to open your mind to it, probably a good time to maybe watch it again and open your mind to it again, because everything thus far is playing out as expected. And you just want to be prepared. This isn't about me being right. This is about being prepared for what can happen if I am right, which is a pretty significant move down across the board on a lot of these memes. Inch, another one that I covered in the meme apocalypse video. This is literally the squiggle drawn from that video. Talked about a push into supply and then a rejection and breakdown. That's exactly what we've got so far. So everything pretty much going according to expectations here. I'm not short on WIF. I share the 3 shorts that I took and I close those in profits, and I'm kind of waiting. I'm hoping that we get one more leg to the upside and I'll re-enter some of those shorts. But right now I'm mainly looking at Bitcoin longs as per the analysis that I shared at the beginning of this video. That about covers it, guys. I think we've now covered Bitcoin. We've covered some alts as well and the different ways that they're going to react based on what Bitcoin does here, assuming that we're going to form a bottom here. That's it for this market video update, guys. I hope you guys enjoyed it. If you did, please like, share, and subscribe, and turn alerts on so you guys catch the next one.